Hi everyone, welcome to another edition of Market Talk. So not a lot of has changed. Stocks are still doing nothing. Finally, we see some action in bonds and yields. The only major difference, at least from what I see, is the crypto market. I'm sure we will talk a lot about that. First of all, I want to can congratulate our dear friend Rafael with the birthday. So happy birthday, Rafael. So I know that you have to leave. So we will start with you today. So what do you see in the markets, and are we bullish or bearish?
Thank you, Vi. Thank you for wishing me a happy birthday. So we are talking pre-market with Vi, and we are saying basically we are doing the same show as the last two shows. I mean, most of the stuff haven't changed. A quick sum up from the latest show. So I was unloading aggressively on gold, and looks like Ted and I were right about this one. I was selling my silver, getting rid of it. Also very nice. Was stopped on Bitcoin, and that was also a good call. I know Vi is getting even more bearish on this one. Can't wait to hear him talk about that. And I had a long oil trade on, so I still have a small position on this one. I'm not adding, but this one also is working. What I did since the last show was I started to reload actually on gold. I haven't touched silver yet. I will explain why. But yeah, that's the only thing I did. So now let's dig into the charts and let's see what it says. Okay, so first we're gonna go with ES as usual. Give me a sec to arrange. Okay. Yeah, should be good. Okay, so again, not much has changed. What we are seeing now is volatility is still going up. That's not good. We are seeing the same kind of pattern also in NQ. Volatility going up. On the matrix, you can see here, volatility also elevated on both. And sure, you get some nice dips to have fun with ES retesting regularly the macro zone in this area. So let me check the exact value. So 6796.5. So if you want to have fun with the volatility we are currently experiencing, you can borrow some dips, make some good money, either day trading or maybe trading for a few days, holding a long ES position. But as a swing trader, for now, all I see is a continuation of chop. So confirmed by the increase in volatility. So I'm not touching equities, and I'm gonna go also through the tech mess that I've been talking about for the past two shows. Nothing has changed also. So yeah, not touching ES, not touching NQ. I'm not interested to buy US equities, and it's been the theme for the past three shows. Europe looks actually better than when we did the last show, so 3 weeks ago. Actually, the CAC is ripping. God knows why. Volatility actually looks good. You can see here, we tested the trade from below, started to go back down. On the matrix, volatility looks good. So interestingly, if you had to bet on a market, the CAC was the place to go. The DAX looks also better than when we talked last time. Volatility is doing lower highs, lower lows. So if you really wanted to put some money in a market, I would have put it on Germany, the CAC, or maybe even the Nikkei. So Japan actually looks good. Volatility is down, but it's been the theme for the past three shows. I mean, we're just keeping repeating ourselves. So for now, again, I'm avoiding equities. But if you really have to buy something, Europe and Japan looks much better than the US. Now let's go to DXY. So on the latest show, the problem was that DXY actually broke DXY volatility, sorry, broke trade of volatility and starting to dump. We were expecting a bounce, which we got. It rejected MFR trend, and so far it's not looking good. We may see a shift. You can see here volatility is going down, but on the matrix nothing. And the problem also is the fact that DXY is still below the yearly pivot here. So regarding DXY, as long as DXY is a bearish trend, in my opinion, it indicates the fact that people are not interested by the US market. It's just another confirmation for me that avoiding the US market is a good decision. So I'm gonna watch into next week. Maybe we get here a cross of trade and trend, and then I may reconsider. But for now, I'm not seeing anything interesting regarding the US. Something also that started to happen on the VIX is we are starting to get the first step of the three-step program for VIX. So you know the thing I'm talking about. The first step is the cross of trade and trend. The second step is the retest of trade by VIX. And the third step is actually the rip of it. So we are entering the first step now. Trade and trend are crossing on the VIX. It doesn't mean that the rip is going to happen tomorrow. It just means that we are starting the steps. So usually it takes about a month and a half to materialize. So I would not be surprised to actually see the VIX going much higher, probably end of March, beginning of April. So for now, expectation is still maybe chop for US equities, but I would be expecting something more dramatic end of March. So tune in 2 weeks. Let's see if this thing is confirming. But yeah, that would be my expectation for now. Confirming again that, I mean, day trading or maybe playing for a few days is the smartest bet for now. And now let's go to CL. So it confirmed the last time and it's still confirming. So this is what you get when you actually have a transition in terms of volatility. So I have addressed this in the last show and it's just confirming again. Volatility of oil has been terrible for at least at least a year, and it started to transition at the end of last year, and you can see it's beautiful. Volatility is still doing lower highs, lower lows, trade of volatility pointing down, trend of volatility pointing down. And what you get in this kind of situation is an asset that is ripping. So you had several buy area. I'm still holding from here. I didn't add at the consolidation phase, but I'm not surprised to see that. If you want to get an idea of a potential top where you would close the position, you will have to go through the past and check how low has trade of CL been to see, okay, we are reaching the minimum historically. Volatility will have no more place down, and then we will start to see volatility pick up. For now, we are not still there. And in terms of targets, so CL has actually confirmed today the monthly pivot. So if you are an elite sub, you have this level. So that's the monthly pivot. I would not be surprised to see the yearly target over here being reached by the end of this month. So again, I'm gonna do some digging to see, okay, what kind of minimum for trade can we expect, and I would guess a top may be interesting to watch in this area. So if you're long oil, so do those two things. Monitor this area, and second, check, okay, are we close or not from the mean historically for trade on CL. Now, gold. So we've had some very disturbing sell here at the end of the last month. The buy area, so I tweeted about it, was between 4,700 and 4,800. So I got stopped on the first attempt I had here, attempted again here, and for now it's holding. So in my opinion, what we're gonna experience for gold is something similar that what we had at the end of 2025. So my expectation would be that we get some kind of consolidation for a few months, maybe the next 2 months, and then we start again the next leg up. So I'm gonna be looking to add more if we get a retest of this area. So 4,700, 4,800 on the JC. I'm going to monitor, of course, the volatility, but my expectation for now would be that volatility will start to go back down, stabilize, and then we get the shift that we got the last time for the start of the bull run. Silver looks a bit different, so that's why I didn't buy this one yet. The problem I have with silver is the kind of volatility we get to. And the last time the volatility of silver went there was actually in September 08. So if you go to September 08, and you can see here the dotted line is actually the same value as where volatility of silver is. When we got there, it actually took much longer for silver to stabilize. So I would not be surprised to see silver actually still go lower. We should not have this kind of selling pressure that we've experienced recently, but I think it's going to take longer to stabilize before we enter the next bull run. So silver, I'm going to buy, but I'm going to wait for a reclaim of MFR trend, maybe even the cross of trade and trend. At least I want to see this kind of pattern here. So volatility going below trade and confirming that volatility is definitely getting under control. So I'm not buying silver. I think it's going to take longer. And this is the kind of pattern I'm going to watch for volatility. So yeah, gold I'm buying, silver I'm waiting. Now the bullet we dodged. So this one is quite troubling. So anyway, I'm getting some buys in Bitcoin. I'm getting some buys in Ethereum. These buys are usually quite accurate, be it for Ethereum and Bitcoin. So I'm not surprised to see people actually trying to buy this dip. I'm not. Vi, I guess, will dig deeper in that. I'm not interested. Considering my position, my view, sorry, about US equities, about the dollar, if ES was reaping, NQ was reaping, if we didn't have this kind of situation with tech stocks, and we got this kind of sell-off with triggers here, sure, I may be interested to buy. But the problem is the overall picture is not good. So I prefer not to buy this one. I know people are asking repeatedly, okay, can it go lower? Should I buy, etc. In my opinion, the overall picture is not good, so don't attempt this one. I mean, you can focus your capital on other assets that look much better. So I'm going to show you Ethereum. Yeah, here you can see it's quite accurate by the deep one. So I mean, sure, you can get some kind of move here to MFR trend, but I don't think it's going to hold. Now, something that finally moved, and it was a topic of the last show as well. 2 shows ago, I was expecting yields to start going back down. The reason why I was expecting yields to start going back down was the fact that we reached the historical minimum daily value for trade. So I checked in the past how low has trade gone before we started to see the volatility of yields start to get back up. So my timing was incorrect because it was now 5 weeks ago. But I said in the last show, okay, this thing is gonna start to go back down, and volatility is gonna start to pick up, or Mr. Trump is gonna start tweeting like a madman. So lo and behold, volatility has started to pick up. You can see the same thing on the 2-year, you can see the same thing on the 30-year, and of course, yields are going back down. So expectation for now would be that this episode that we've gone through in December to end of January is over, and I think yields are gonna start to go back down. So again, this is one of the theme I expect for 2026. I think I think bonds are gonna be a good asset to hold this year. You can see here also on IEF, SHY, TLT, EDV, zeros, the shift has happened. Here you can see volatility is going down, trader volatility is pointing down. No matter the one you are looking at, it has shifted. So I think this thing is going to be the theme of 2026. So good if you're holding bonds. I think it's going to be a good asset to hold. And the last thing I want to talk about is the tech mess I've addressed for the past two shows. Big cap like Tesla also. So look at this volatility. So Tesla, Palantir, Microsoft, even Amazon, and Google starting to pick up. It was the one that was not yet exhibiting this kind of pattern, but it's starting. Volatility as well. So yeah, Netflix has been a nightmare for some time. Even Meta. So we had a one-off here and then shit the pants. And Apple. Interestingly, the only one holding and actually trying to transition is NVIDIA. So volatility is actually starting to go down. We have a cross of trade and trend here, and it has reclaimed MFR trend. So the question is, okay, considering the kind of calendar I have in my head, so expecting a VIX spike in end of March, beginning of April. So are we going to see a short-term shift? So NVIDIA would be the first clue, and then we're going to start to see some kind of transition for a month or so in the tech stock, or is this just a one-off? And volatility also is going to start to pick up on NVIDIA. So we are talking before the show with Vi, and Vi said, if NVIDIA goes, the market goes. And you can see it's actually a true statement. All of the tech stock, all of the big ones, they don't look good at all. The only one that is currently looking good is NVIDIA. So the binary scenario is the following. Either NVIDIA is indicating some kind of short-term transition and maybe the market hold for another month and a half, something like that, before we get the big spike in VIX. Or maybe NVIDIA doesn't hold and the market is going much lower. So yeah, that's my current take for now. So again, holding some small position in oil, starting to buy back gold. I'm not touching ES. I'm not touching tech stocks, and avoiding Bitcoin at all cost, and waiting to buy silver. So not yet.
Thanks, Raf. I know that you have to go, but can you address the US dollar? What are you thinking about US dollar? Because I think this is a very important topic for now.
Yes. So what do you mean? Do you want me to dig deeper into DXY or what my
Uh, uh, do you think we are done with bear market in the US dollar or not?
I think we're gonna know next week. So basically, if we get a transition next week, okay, we seems to be like capital is interested to get back into the US market. If next week we get another failed attempt at recovering bullish trend, then we are in for another month of dollar being bearish, at least. So yeah, that would be my expectation. Next week we're gonna know for sure. It's indicating, it's giving some signs. It would try to transition, but look, last time we had the same thinking. I think it was with Ted. It was 5 weeks ago. We were like, okay, looks like the dollar wants to shift. And what happened? Maybe 3 or 4 days later, it went down. It literally went down like in a straight line. So next week is going to be the big tell. Is capital interested to get back in the US or not? That would be my
Yeah.
my take.
Exactly, that's my thinking, especially when I'm starting to see some upward momentum in bonds and notes. Yeah, okay, thank you, Rafael. So, Ted, what's happening and what you see in the markets?
Well, I think Raphael did a great job of telling us what's happening. And let me try to take a little step back and kind of frame the macro picture a little bit and kind of hit on some key indicators. And then I'll also share some thoughts around some trades and positions that I've been holding. And like with the exception of FX, which I've been getting whipped around a little bit, pretty much everything's been status quo for me. So anyway, from a macro indicators point of view, one change just prior to the last show, my macro service had pivoted to reflation, which is growth up, inflation up. That lasted about 3 weeks, and we had a big impulse in the deflationary side, which is what Raphael is probably picking up on the bond side. But what it ended up doing is pushing us back into Goldilocks as of the 13th. So as of last Friday, we pivoted back to Goldilocks, growth up, inflation down. And then looking at my indicator board, some of the things that we've seen is we've seen initial claims came out today. They had been elevated into the end of January. It was attributed to storms, apparently, and that seemed to bear out because today the print was 206,000 claims. So that was down. Employment picture is looking fairly decent from a growth point of view. Credit spreads are in line at 2.94%. One of the concern areas is JOLTS. When JOLTS printed the December print, job openings were relatively, well, no, they were the lowest in a long time at 6.54. Senior loan officer survey down a little bit, still a little restrictive at 5.3%, and no change to ISM manufacturing or services since we last met. Payroll growth, we did get a payroll report after an $862,000, 60,000 revision from March 2024 through March 2025. We ended up with a positive payroll print of 130,000 in the US, and the estimated sort of rate now where we're keep holding pace is only 15,000 given the exodus of immigrants from the country. And we did see the unemployment rate tick down to 4.3%. Likewise, we saw average hourly earnings tick down to 3.7%. But when you look at that in the context of inflation, which we're going to look at in a minute, at down to 2.4%, real earnings are actually continuing to gain. And that's likely driven on the back of productivity. We had a 3Q print, 4.9%. We won't have 4Q for another week or so. But other than that, the other thing I wanted to point out was GDP now had been printing somewhere upwards of 4%. It ticked down to 3.6% a couple of days ago, and then today, this morning, was at 3%. So still strong economic growth projected, but lower than what we were looking at 4.2% at the end of January. In terms of inflation, we've really seen some positives on the inflation front. We've seen it not only here but also in Europe. in Asia as well. So our recent print for 5-year break-even inflation at 2.43%, 5-year forward at 2.15. And an indicator that I've moved up into a leading indicator is Trueflation, which is now at 0.92. And I bring that up because it's really been proving out to be, at least, if not dead on in terms of the number, directionally, it's led these lagging indicators that the Fed is looking at by about 30 to 45 days. So, I mean, we're looking at Trueflation below 1%. That said, on the other side of that, we have oil CL printed today at 66.58 right now. When I did this, it was 66.50. That's up 15% since the start of the year. So that's a concern and certainly a leader in terms of inflation. CPI, though, was down to 2.4% from 2.7%. Core was at 2.5%. Surprisingly, inflation, owner equivalent rent was up to 3.3% versus 3.2% last quarter. Now, the Fed relies on PCE inflation. They made their decision on PCE inflation back in January based on a November print of 2.8%. So they're already 2 months in arrears before they're even making decisions. So they're looking way in the rearview mirror to make policy decisions. The Cleveland Fed, however, we will have a PCE print tomorrow for December. The estimate from the Cleveland Fed is a continuous downward slope from 2.6% estimated for tomorrow, 2.6 for January, 2.42. These guys have been pretty good historically. So we do have a downward trend in inflation, hence how the market's starting to price it again. No inflationary impulse. This is the Trueflation indicator at 0.92%, and you can see the rapid drop off in inflation at the beginning of the year. I expect that to catch up in the headline prints once they start printing in March and April. Another plus on the inflation side, this morning, the Walmart CFO came out with their earnings report and said consumer price increases from inflation and tariff hikes should ease in the coming months. Food inflation at Walmart in the fourth quarter was just 1%, while it was slightly higher for general merchandise. So a real positive. On the other side of that, today we've got oil prices back to multi-month highs. I'm going to skip over themes and just touch on monetary policy for a moment. So in January, just the day before we met, we basically had a Fed on hold. They pointed to unemployment showing signs of stabilization and inflation still elevated. Yeah, they're looking at November PCE, and yeah, it was 2.8%. Okay. So anyway, what we saw from the minutes yesterday is some underlying conflict in terms of participants. So most participants judged that the policy rate having been reduced by 75 points over the past year, that the current stance was now within the range of estimates of a neutral stance. So neutral, and 2 participants disagreed. Surprise, surprise, it was Waller, who was looking for a Fed job, and Moran, who is already employed by the White House. So nevertheless, the minutes showed there was more conflict among the 12 participants on FOMC. So we'll see how that migrates over time. I think Bowman was out this morning even saying that she thought maybe the employment number wasn't accurate. Oh, go figure. So anyway, and then of course, T2 facing the midterms, T2 equals Trump, is really focused on affordability. Right now, I've highlighted the fact that we've got encouraging Iranian resistance, which has actually become much more dour than that. But all of these things are sort of working. We've got lower taxes, which should be stimulative. We've got tax cuts coming, or tax cuts have come, and filing started last week. So we should see a lot of money flow into the system. That may cause some initial surge of inflation. We'll see. They're pushing to lower the cost of money in terms of credit cards. Home ownership, mortgage rates ticked down to the lowest rate in a year at 6% this morning. And then, of course, energy is a concern area, but I think the long-term game there is to to secure oil supplies and drive those down longer term. And then healthcare drove pharmaceutical companies to lower prices and introduced Trump RX a week ago. Good stuff. From a positions of trade point of view, I'm going to go right to it. I think most people that watch the show understand how I kind of think about it in terms of having a diversified mix. I'm a position trader. I'll hold a position for years if it still keeps working for me. Bonds, equities, commodities, alternatives, FX, their volatility adjusted position sizes. I've got a trend, primarily it's trend with a mean reversion overlay, which gets me into some very oversold positions that are maybe at the verge of reversing. And then I run relatively tight stops with a 4-day rule. The 4-day rule becomes more and more apparent all the time because it gets me out when I need to get out, but it also sometimes cuts me down just when maybe I should be buying, but it is what it is. So looking at asset performance year to date, what we've seen is, SPY, this is as of yesterday's close, SPY basically break even for the year. Qs down 1.4%, looking terrible. And then the Russell, however, up 7.24%. We also have EFA, which is developed markets, up 8.65%. This is all in dollar terms. Emerging markets, including China, 11.84%. And then we actually see this little bump up in TLT up above its yearly opening price at 3.11% as of yesterday. Tacked on a small amount today. And then gold and commodities, which are down here, still compounding returns for you if you're long. So in terms of my positions, I still am long FX, but I'm not loving it. It's chopping me up. Long commodities continues to work with some pullbacks along the way. Long resource stocks working well. Been an opportunity to sell into strength. And then continuing to be overweight international and EM and overweight corporates. I did get into a TLT position about 2 weeks ago. So we're going to go through all that. I'll do that quickly. Let's see here. All right, switch over to charts. So I just want to hone in on this for a second. This is how I started the charts presentation last time. We looked at GVZ, which is a proxy for gold volatility. And this was the day of the show when we said, folks, 48 vol on gold and your feed full of silver and gold. It's time to take some off if you haven't already. And of course, vol turned tail on the next day, along with price. So here was the 29th when we met. We had this massive hanging man top, and we sold off hard. This happens to be IAU, which is a position that I have had in my mean reversion strategy. And I actually opened a large position in April, and I've traded around it ever since. And it gave me, my general rule is if I get plus or minus 3% on a day, I'm buying if it's down 3 and I'm selling if it's up 3. And so just trading around this core position. Well, what that gave me on Monday the 2nd was an opportunity to buy gold or IAU in the $90 range and to sell it 2 days later, both on the Tuesday and the Wednesday for a handy 6% profit. So the plus side of the heightened vol is you can get these opportunities where stuff goes way too far in one direction and then gives you an opportunity in the other. I don't particularly like it, and my overall gold position has come down pretty markedly along with as the volatility has increased, my position sizes tend to decrease and my stops tend to tighten, which gets me out of positions and smaller during these higher vol time frames. I have introduced strategies that help me get long and trade around things, and so this is one of those ideas. In the dollar, so this is the weekly chart, and this thing has given me 1, 2 buy signals over the last since mid-December, but it's also chopped me up and gotten me out and stopped me out, and it's bearish trend and all that. Yet here we go again. another week where we're up. It's only been 3 days of trading. Oh no, dollar's been trading the whole time. So we're up 1% this week. We'll see. I think Raphael's right. Will we get any follow through next week? I don't know. But just looking at this dollar chart, here's the opening. This is a tribute to VAI. I now track all my yearly opening prices. We opened here in January at 98.25 on the USD. Still trading below that. I still have this as bearish trend. So from my point of view, I have been stopped out. I got stopped out of or took my final position off back on February 6th in the dollar, and I've been long a bunch of other things. And I got long, we went over this last time. This is FXA, continues to work. These reds are all sell into strength. I've been just holding the position. I still have a decent position. It's still working for me. I've not been stopped out. So this to me looks like it's getting ready for another move higher. We shall see. On the other hand, I used on the pound, this is FXB. I got long here on the 23rd of January. I was able to take some profits right out of the gate on the 27th. I tried to buy some here just the other day on the 17th. I did not try to buy some. I bought some, and then immediately it was very close to my stop price. I stop hit yesterday, stop hit today. I'm 2 of 4 strikes on FXB. It is pretty deeply oversold. It could rally here, but if it continues below this level, I will be out of the position in 2 days. FXY was another great signal, gave me a signal back on the 23rd of January. Again, got this big pop, was able to take some off, and then I bought some here on the 18th, which is yesterday, and it is really close to my stop. So we'll see if that holds on. When I look at USD JPY, I see a situation where it could be near the ready to turn. So that's my hope, but I don't trade on hope. I trade on risk management in this particular instance. Get in, risk manage. PDBC commodities continuing to work. We on the day of the show, commodities were also ripping higher. This is the daily chart of PDBC. We got this really overextended move way above the top of the Bollinger Band. Again, 2 days later, sold off hard. I bought some here, still holding that position. Didn't add here, and you'll see the same thing in oil. Actually, yeah, I'll go to oil. Oil, USO. Where's my USO? There we go. So I did use an opportunity to get long here in USO after having sold some on the 29th. So USO I bought in the neighborhood of 75. And then today I took a little bit off the table because I thought it was a good idea. It's super extended again, good move higher, able to monetize a little bit of that risk. Just likewise, again, these are all trades, very similar trades. This is XLE, which is the equity ETF. Got long at the first of the year and have just been selling 10% here. Every time we get these rips higher, I'm taking some off. There's been no opportunities, which happens a lot in bull runs, is you don't get any opportunities to get in. You don't get that pullback as much as you'd like. So it pays to get in early and then hold and sell when you can. My target on this, which was a weekly target when it broke out at the first of the year, was to 54. It hit 55 the other day, so I took some off. And so this is a really extended rally. I would expect we're going to have some sort of pullback here. I mean, we're going to get support from crude on this Iran thing, clearly. But even with today's 2.5% move in crude, we didn't get as much of a move. We only got 0.75 of a basis point on XLE today. Moving on. This is the SPY. These are my stops, my positions. You can see I got stopped at the low end of the range. Stop. So I'm down to a quarter of a position. I thought, geez, yesterday, it actually was it looked like it might close above this kind of key level here. It didn't. And so where I am with this is at a quarter of my original position size. And after today's action and after the tick up in vol, I'm okay with where I am with SPY right now. So it's not been a good return. It's just been chopping me up. So on the other hand, this is EFA, opportunities to sell. My most recent sale was back on February 9th. No change to it. Continues to be in a nice uptrend. EEM did get a nice pullback here on the 30th. I added to my position, letting it ride. VPL, this has been another one. This is a Pacific, Vanguard Pacific fund, and this has just been a great trade and a great position for me. You can see I built my position back here, added a little here, and then it's been sell, sell, sell as we kind of climb this amazingly steep wall. It's just been a great trade. This does not have any China in it, so it's a Pacific ex China. Of course, EEM does, so I have China exposure. All right, bonds, and this is where I'll stop and turn it over to buy. So we got this little buy signal back on January 5th. Having been through this before, I didn't take any position here. But when I got this divergence on the weekly chart and this second buy signal, which was the end of the week of January 26th, so on the 30th, I think that's the right date, on the 30th, I got a signal to get long. And I said, okay. So I put in 200 basis points. Actually, it was on the 5th. Okay. All right. So I got 200 basis points on the 6th, and it just took off. And so I haven't had an opportunity to add to the position. It's subsequently inflected bullish trend in my book, which is 55-day time series price momentum. So we do have a bullish characteristic. I don't have a large position. This thing only moves 65 basis points a day in terms of 14-day realized vol. So it's an asset that you can own as it comes back down. And so we'll see if we get a decent pullback. I would love to see it pull back to this breakout range around 88, 89 to add to the position. Just the other thing, I indicated that I'm also overweight corporates. So LQD is higher grade corporates, got long on the 9th of January, added to the position on the 20th, and that's been working well as well. So, what continues to work is commodities. Ironically, bonds are starting to work in the face of rising commodities. And related equities, international and emerging, not domestic, but for maybe mid caps and small caps. Over to you.
Thanks, Ted. Very interesting. Yeah, my part today will be short, most likely, because the main asset class that I want to cover is crypto and a little bit of fixed income. When it comes to equities, everything is basically the same. Like Rafael already said that we were talking about it for multiple shows already. So I will start from usual stuff, and we can see some interesting things in the correlation. So as always, I will start from here. So 10-day correlation, and of course we see these two red columns, which is TLT and UP, which has a negative correlation to basically everything or almost everything, and these correlations are getting stronger and stronger on a negative side. So if you see, we have SPY TLT at minus 0.65, SPY UUP at minus 0.28, and this trend is nothing new. Maybe 3 shows ago, situation with the dollar was a little bit different. Dollar and stocks was basically a same trade when it comes to short term. Now the situation is more quote unquote normal, and the same applies to bonds. So apparently I was expecting bonds to break to the upside since the end of the year. So in January, I was already talking about that maybe we will see some upward momentum, and of course, it was not the case. Bonds tried to break above our flattened zone and yearly pivot multiple times, but all previous attempts were unsuccessful. And now finally we see some success in that, especially in the long end, which is interesting. The ZB is moving strong. ZN is also, but I will talk about 2-year, which is a different story. I will talk about it a bit later. But if we continue with the correlations, which again is important, and I always repeat that you can get the script absolutely for free or measure correlations using some other tools, up to you, but it's very important to monitor these, especially if you are a active portfolio manager managing your portfolios, and you want to make sure that not all assets are moving together, and to be able to spot the changes in overall trends. So 21-day correlation is same, moving down and quite strongly. So we have this downwards trend in SPY TLT correlation, which is minus 0.34, and SPY UUP, same story, minus 0.2. So keep that in mind, that if we see some strength in US dollar, that can cause some further trouble for equities. Okay, so now, as promised, let's talk about Bitcoin. So first I will start with Bitcoin, and I will use CME futures, but you can and you should use the chart of where your liquidity is, because with crypto it's tricky. So whatever proxy you are using, it can be ETF, it can be some crypto exchange, but make sure you use that. But I know that couple of our users, at least a couple of our users, are having FOMO and want to buy crypto, and I don't think that it's a good idea, especially now. And let's dig deeper and let's talk why. I was watching one level, like a hawk. It was very important. The level was 63,000, 63,000 and a half on CME futures, and that's the reason is very simple. It was just simple 50%, because that 50% always gets a reaction. So the high on CME futures was 100. Wait, where are we? Yeah, the high on CME futures was 127,000. So half of that is basically 63 and a half. That's all it is. And I was watching to see how it reacts. And on that day, when it went to basically 60,000, we had that crazy sell-off in crypto, and then quite a strong bounce. It looked like it held, and at least for now, this level held. So of course, I will continue to watch that. But other than that, I still see a lot of weakness in crypto. And if we're talking about Bitcoin, Ethereum, and Solana, all big coins are. They're all looking very bad, and I see no reasons to be able to buy, and I'm not even trying to buy this thing. We have a target at 57,000. We'll see what happens there, but for now, in Bitcoin, you have two levels to watch that are quite close to the current prices, which is 63,000 and a half, and then of course, previous lows of 60,000 and 57,000, which is the target. But based on my work and based on longer term prices, I have levels at 42,000, I have levels at 35,000. So at least for now, based on this momentum and based on this volatility, I see no reason to take risks, especially knowing the fact that I'm expecting equities to have quite a weak first half of a year as well. I was talking about it since December, or even November, and at least for now, stocks are doing nothing. They are not breaking. If we're talking about indices, they are still fluctuating around yearly open. 2 days ago, they tested our flattened zone at 67.96, but yeah, compared to where it was in December, basically equities are in the same place. So Bitcoin and crypto has a very strong correlation. Sorry, Bitcoin and indices has a very strong correlation, strong positive correlation. I think that these talks that were very popular 5 years ago, or even earlier, that crypto is a hedge, luckily, I don't see these talks anymore. We all know that it's not the case, so keep that in mind. That if stocks break, it would be crazy to expect crypto to rally. It's not what will happen. At least that's what my process is telling me. So watch that. We are not in the risk on regime. We are not in risk on scenario currently, especially in the United States. Raphael did a great job talking about Europe. Europe looks better, but actually in Europe, I think that FTSE looks best in Europe, and then, of course, Japan. Japan is still in Nikkei in risk on scenario. We saw this, of course, this rip in Nikkei after elections, and for now it's holding. So we will see how it's going. But when it comes to equities, USA is not looking good, and at least for now, I'm not taking any risks when it comes to owning US equities or US stock benchmarks. And this applies to crypto, of course. So I just wanted to show you a couple of levels on Bitcoin, and you can do that same exact process on Ethereum, Solana, and you will see the same. You will see that, of course, these coins are even weaker than Bitcoin. But yeah, this 50% level is the next that I will be watching. And for those who are feeling FOMO, please don't buy just because you see that level being retested or something like that. Be very careful, because of overall trend and chart looks terrible. Overall situation in the markets and capital flows when it comes to equities and crypto looks weak, especially in crypto. So don't do crazy things. And if you want to try to buy a bit lower at the target or at that 60,000 level, do it with very, very small size. But if I were you, I would not do that. Now we will go to fixed income. And remember that we already saw that there is a very strong negative correlation, both 10-day and 21-day. Actually, you will see same patterns if you go to longer periods for correlation. So we saw targets, we saw TLT reaching our quarterly target, and it was rejected hard, but overall TLT is a lot higher compared to its yearly open. I will address something. Of course, it depends on how you view markets, what is your process, but one thing that I would not use is dividend adjusted charts, especially on things like TLT, because every time when they pay something, all the prices are being disrupted and all your levels are not correct. And why I'm saying that, because if we are calculating some levels and prices that we may be interested in transacting at, or for our risk management purposes, we are interested in prices, not in a total return situation. So yeah, TLT is up 2.8% for this year, if I'm remembering it correctly. Yes, so quite a nice move, at least for now. But we will see what's happening there. I still expect it to go much higher, but of course, first we need to break this level. Monthly situation, of course, is very strong. We already had an extraordinary month, and we are basically on the third ladder. If you watched one of the first trading plan videos, you know how we come up with additional targets if some of these are broken, but usually you don't need to, because you will see matching levels on other time frames, like quarterly, for example. But very strong month in TLT, and if we go, because last year we had, of course, very volatile period, and annual ranges and annual targets are much higher, but I would not be surprised if we see at least 93 in TLT non-adjusted prices, maybe even this quarter, and if not, then on the Q2 of 2026. But we all know that I'm using futures for my proxy because they work. Usually they front run the things. So what I see in the market is if you are monitoring your spreadsheets with macro zones, you know that our flattened zone since December is 115 and 30 seconds on ZB, and actually this level was very hard to crack since December market tried many times. First, it looked very bearish when it came back, when it tried to break, when it came back, of course it went down, but it was always churning around this level and nothing really happened. And this level is pretty close to its yearly open, which is 115 and 8 30 seconds. And finally, we had this breakout, and now we are much higher. So our process tells us exactly where we would be managing our risks and where we are taking our positions off. So at least for now, if we see that market is above our flattened zone and above yearly open, same situation as with TLT. It reached a quarterly target, it got rejected, but now it's trying to move further. So manage your risk on that, but bonds are looking really good. Xian, very similar situation, and then I will go to ZT, which is actually the most important for now, at least that's what I think. Yeah, so of course, same situation. We reached the target got rejected even harder. Market was churning around its yearly open for quite a long time, and almost completed its equidistant swing if we measure this break and what it did to the upside. But overall, longer term, so 30 and 10s are looking very bullish, and we see, of course, the opposite situation in rates, which is a normal thing to see. But I hope you are monitoring 2-year, because the situation is absolutely different. The situation is absolutely different, and 2-year is actually a very good proxy of what market is expecting when it comes to rates and Fed decisions, because short term is what usually is way less volatile, but represents the overall market thinking way better, especially when it comes to shorter term. So first of all, ZT is below its yearly open. Also, ZT flattened zone is 104.12 as well, so basically the same as yearly open. So we are below these levels. Market bounced from the downside target, but still, compared to 10-year and 30-year, we are not seeing the strength. We will see if it catches up, but I see the exact opposite situation. Now market is actually correcting down, so we will see where it goes, and of course the opposite applies to yield. And I think that now monitoring 2-year yield is way more important than monitoring 10s and 30s if you want to have a clue what market expects when it comes to rates. I will not talk about SOFR and other stuff because it's not what we talk about on this show. This show is mostly for retail users and people who are actually managing their own portfolios. But yeah, I would suggest you use a 2-year as a proxy for short-term situation in markets. And bond traders are smart. You can't ignore that. So at least I am from the when it comes So my positioning, I'm still long ZB futures. My profits are in the money, so break even and in some profit. So I have a stop loss, which is trailing, and I'm still riding. I took some off at the target. I'm not touching anything on the short term, but this is what makes me concerned, and the main reason why I'm even more careful when it comes to my positions in ZB is of what is going on in the 2-year yield. And another thing is I wanted to touch on dollar, and there is a reason why I asked Rafael about it, and Ted, as always, did a great job explaining his views and positioning, because we reached a point in major cross pairs and major futures contracts, like euro dollar and dollar yen, so 6E and 6J, where it's make it or break it moment. And I'm thinking I'm still not long dollars. I'm mostly long euros since the mid-year of mid 2025. But I'm thinking that maybe if we make another move higher in dollar terms, maybe I will flip my views, and I want to explain why. So if we go to 16, if we go to 60 first, let's take a look. So first of all, yearly open in 60 is 17,860, and we are closing below this level, which is very important. But if you're monitoring your spreadsheets, we have 1.17650 as our flattened zone. So today it looked like it held, and we had quite a nice reaction in the second part of the day. Low was 17,550. Our level is 17,650. So that's why I'm saying I need to see a bit more of a downside in the 6E or upside in dollar terms. But maybe if that level breaks, we will see some at least short-term upside potential in DXY. Of course, like Rafael said, also we need to see if capital wants to return to dollar. But another thing which you should be monitoring is, of course, correlation of dollar and TLT, for example, or dollar bonds in general. And of course, no surprise, now it will be positive. So when I see this break to the upside in fixed income, that's just another checkbox in my process that maybe it's a good idea to at least not be short US dollar. But this one, it still needs some time for me to do something with it. But now I have this red alert in my spreadsheets and my platforms that I need to monitor the situation, because maybe we will have a chance to make some changes in our portfolio when it comes to FX. I will show you 6J also, because it's another important proxy, but you will see that yen is still above its yearly open, which is good, but we of course see this downward action and downward momentum in yen as well. So another matchup that I will be looking at, and I'm sure you know that for me, I want to see multiple signals that are confirming each other. What I want to see, of course, is 6J to go to its yearly open at least. But yeah, I wanted to address dollar. I wanted to address the situation in bond markets and crypto. I'm not talking about stocks, and you know why? Because even though indices are not crashing, nothing changed since December, I believe, because after December expiration, I said that it was very weak expiration, and I'm expecting first half of 2026 be weak for stocks. That's what I see. But one thing from the process perspective that I have in my notes is that, yeah, 2 days ago our flattened zone in ES held, and we had this 100-point move to the upside. I will not mention the zones, you have them on your spreadsheets, but But keep in mind that NQ is below its flattened zone, NQ is below its yearly open. So NQ is below all the major levels. And keep in mind that when it comes to bull markets and rallies in the stock markets, you want to see NQ stronger than ES, or at least in par. And of course, this is not the case. NQ is weak. What is strong is Dow. I'm not monitoring Dow on a daily basis. I usually just mark the levels every weekend to see how it behaves. But usually Dow represents value, and we see also some strength when it comes to capital flows in so-called boomer stocks. So of course, Coca-Cola, J&J, and other stuff. So monitor capital flows, and you will see what is leading. And it's actually in reverse. When you see Dow leading, it's not a time when you want to be in the risk-on situation. Yeah. So NQ is weak, and that's a very big red flag. So. But nothing changed from equities, but from when it comes to equities since December. That's why I will not even talk about it. Yeah, so that's it. I hope it was useful. Yeah, at least on YouTube, I don't see any questions. Yeah, people are wishing Raphael happy birthday. Yeah, so we want to wish Raphael happy birthday again. So Ted, do you have any final thoughts, or maybe you want to add something?
No, I'm glad you put an exclamation point around the dollar because it is really at that sort of key level, and it could rip higher from here, could crash down from here, and I think Raphael said similar. So it'd be good to see next show where we are and whether that resolved. Are we in a chop bucket for that, and or are we going to get a move one way or the other? So yeah, I'm glad you spent some time on that. It was good.
Yeah, as always, when it comes to levels, we always have three scenarios. I mean, level will break, or it will reverse, or we will have a chop. So, of course, at least I still need some time to see what's happening with the dollar, but we are definitely in a very interesting area here. Yeah. So, thanks everyone. Thanks, Ted. Thanks, Raphael. And thanks everyone watching. I hope it was useful, and see you next time. Bye.